This is Andrew, also known as Trial NA, the strategy maker of Simple and Short. And today I wanted to quite simply walk through the startup of Simple and Short. So I sometimes get a lot of confusion around a couple of the startup parameters, mostly around cash, the cash parameters. So let's take a look. If the best way to start any strategy is to go to the strategy page and choose the run button. From here, you can give it a name. I tend to do something like SS, BTC, USD, something along those lines, depending on where I'm doing it. I can choose, obviously, what market to do it on. In this case, there's really no difference between simulated and live, so I'm going to just run this in or start this in simulated mode so we can talk through these. Really, the only difference is when you hit live, it's going to ask you for your API keys, and you can use the offset button. So, typically this is, I think, where things get important is, I think one of the most important points is how much, if any, BTC are you going to be starting with versus cash. You can start with one or the other or both. And this is where you'll see how that affects. So I prefer, and when people ask, that people just start in whatever the right side is. So USD, Euro, if you're doing ETH, BTC, start with BTC. The reason for that is that, I sometimes see a lot of people starting at peaks of the market, right? When it's up, there's kind of a big influx of new users, and they go buy Bitcoin, turn it on, and in here they basically give it zero and say, okay, I bought 5 coins, I'm going to give it to it. And buying at the peak, inevitably it's like it goes down, 5% or something, and the bot sells it at a 1% loss. It gets them out of the market, but it really is taking a first loss, there for just because of at the person's whim of when they bought it. So I would prefer to let the bot determine when it should be buying the next time. So let's start it under that, but I'll talk through kind of what happens if not. So if I click run here, what's going to happen is this is the most important part, the parameters. So in this case, I have $1,000 in my portfolio based on what I told it in 0 BTC. This field right here is strictly for how much cash from the portfolio you're giving. In this case, I had 1,000, and if I want to use all 1,000, I'd put 1,000 in here. Again, typically, unless you're really knowing that the market is going to go up, the preference is just to tell it, wait, put a 0 in here, don't tell it to buy. Know your fee rate structure with Coinbase/GDAX. It's typically quarter of a percent. I tend to tell it not to sell on stop. And then here, this is the tolerance. I would say either check the latest forum. There is a page around the strategy that talks about the strategy. Not the strategy page, but the discussion board for the page where I talk about current settings. This does change over time. When Bitcoin was 600 USD a coin, it behaved very differently than when it's more like now where it's over 1,000. So typically for BTC it's 0.07 now, so you can see that that's changed, and I wish I could change what I originally made that label, however long ago I made that, but unfortunately due to some of the logistics about how some things in the platform work, if I go change that, it'll cause problems for a bunch of other users. Now, percent of cash, I tend to do 99. I mean, you know, I just like to give a little bit of buffer for things to go wrong. And fee calculations and so forth, it's fairly accurate down to the penny, so you could probably put 99.99, but I tend to, with all mine, just put 99 to be fairly accurate. Now, again, this is 1,000. Now, if you think back to where I had the option of starting with both cash and coin, if I had 1,000 and 1 Bitcoin, what would happen at startup is that start equity would actually be 1,000 plus however much that Bitcoin is worth. At the first tick, it's going to go out and say, what's the price? If it's 1,040, my starting equity would be 2,040 that it would use to calculate my growth going forward. Conversely, if I wanted to say, okay, I've got those 5 Bitcoins, I don't want to put in here what I think they're worth. This is purely for how much cash I want to add. So if I was starting with 5 Bitcoin and that was what I wanted to start with, I'd just put a 0 in there. So that's, I think, probably the biggest mistake that people make is just purely over this cash parameter here of what to put in. Now, these other features down below are what I would consider more advanced features. There's some, you know, tolerance really drives a little bit about the behavior of that individual coin, and then I've given some ability to override where that buy and sell point is based on the tolerance. You know, so there's, if you think of that tolerance almost like what the waves are for Bitcoin, it allows you to figure out where on the wave you want to buy and sell. I don't recommend using these unless you've done extensive back testing, and even then, most of the time I see these either for really advanced users that know something about market conditions that are coming up, or they're using, you know, what I would consider more exotic pairs, right? Some of the altcoins that are, you know, probably not the higher ones in volume, right? And they're trying to maybe move a little bit more quickly or be a little bit more conservative about getting in and out of those. The last 2 checkboxes here around margin trading. I really like margin trading. I think when you've got something that's doing well, and I've done well with this, I think margin trading can be very advantageous. You know, I've seen in markets that are doing well, where, you know, you take a 10% monthly profit, you know, so if you were to run it over 4 months and get a 40% return, using margins, you'll turn that into more like 120%, right? So it tends to do well, but, you know, if you're in a down market, you've got to realize that that will multiply, you know, any losses that you've got. So if you take that first hit, it can be a little bit to overcome. I think one of the advantages that margin trading has is that you can also trade against the market by using shorts. This works really well in things that are roller coasters. Like I used to see ETH as a roller coaster up until you know, March. That it was, you know, constantly going up, you know, $5-10 and then down $5-10 and just making these big swings and kind of going nowhere. And, you know, trading on the shorts allows you to kind of ride both sides of those waves. Those waves are typically really good things, but, you know, it allows you to do that. But if you choose to trade shorts in something like the Bitcoin market, where it's really been up and to the right for the majority of the time, you know, it ends up really just kind of taking away from your profit. So where it went from 40 to 120, trading shorts actually took it down to about a 20% profit over those 4 months. You know, obviously, if you turn it on at the right time, like after the SEC decision that happened in March, where you kind of know you're going to have some downtimes, well, it's going to do well during those times where it's heading down to the right. So you really got to, I'd say, know what you're doing there. The one note on margin trading is that margin trading really doesn't operate off this cash. As you know, your margin account has some maintenance. and based on your deposits in that margin account, which most of those use a separate wallet, really the only thing that drives it is the amount of leverage. If you're using margin trading, I would highly suggest doing around 90%. It might be a week or two prior to it closing that position that you open, so to speak. So you want to ensure that you're not, running past your maintenance margins, and that 90% will help you keep out of trouble there. So, that's really it. Set these up, figure out your percentages, the tolerance, and really how much assets you're going to give it to work with, and hit run. Once it does that, you'll see it fire up. And then typically after starting it, when that first tick comes, you'll get your first log. So we won't really get a great chance to see that here, but those logs, I think everybody knows how to go to the strategy page and look at live links. You can go, if you're running a back test, you'd obviously get a chance to run through it. But if I were to go here down to the live instances that I've got showing and go to these, you can see what it's going to look like. This is really the info sheet. Tells you, what the price is from a short, what the actual trading price is, information about yesterday's price, high, low, if there was a last trade, what was it at, next buy, sell trigger based on the short. This tells you how much cash you've got in your portfolio, assuming you're not trading on margins. And then this is tracking the instrument. This is dependent on what you're working with. If it's BTC USD or ETH BTC, this will tell you how much that instrument has gone up or down, how much equity you started with. Again, that's your cash plus any, like in this case, Bitcoin based on the start. Your current equity, which is based on any cash or assets available. Cash available, how much it thinks it's there. So this is a really good way for you to know if you kind of mixed up that those starting parameters. Typically what you'll look for is, hey, my portfolio says I've got this amount. Cash available says I've got another amount, because something was inputted wrong there. And those will be, it's okay to have less cash available or be using less cash in the portfolio. But obviously if it says it thinks it's got $10,000 to work with and your portfolio only says it's got, $6,000, you've obviously done something wrong. And then down here, this shows your growth. And in this case, you can see that it's been running for 19 days, and this is after that SEC decision. So this is one of the few times I've seen it down over that period, but it's actually at negative 14%. And the strategy has managed to make 14% over that 19 days in downtime. So this tells you how long it's been up, at least for this, what I would call a run. A run isn't how long it's been up. It's actually since last change. So Simple and Short does have the ability to add funds to it. And actually you can see that I've done that, right? So I had $3,800 on the previous run. It ran for 37 days. And I increased it to 6,500. So I added some funds. So you can see, it's been running really well over about 120 days or so. And you can see over that 120 days, here's what I started with, here's what I made, here's the percentage growth, wins, loss. So it keeps track of that. So you don't have to necessarily stop it and start it every time you're wanting to add funds or make changes. And there's lots of advantages to that, to having it run a long time and not stopping it, starting it, such as, you know, not losing what it's learned or the next buy and sell about the market. So I think that's probably enough for this one. Obviously, I think the last thing that I'll point out is that, you know, I'm here to support you who are trying to use this. So please feel free to reach out to me. Send me a personal message, email me. Let me know if you have questions about, you know, what parameters you're using, you know, what strategies you're using, as far as, you know, if you're trading primarily Bitcoin USD and you're wanting to trade ETH BTC, you know, what does that really mean if you're trading both of those two pairs simultaneously with different bots? So I'm here to help with questions. I hope this has been helpful, and we'll look forward to the next video, which will probably be on margins.